Kevin Charette.
Here.
And I'm John Tabor. I'm the chair, present. And we had a yes to an RSVP for Tom Rooney, so I'm hoping he'll be joining us. So all along, we've had this blissful idea that we can launch in the fall. And that has changed on us. So I think we've got really two options before us. We could launch in a sort of first wave Part B in June, or we could wait until next year in April. And the reason this has changed is, from what I can learn, and Kevin, you can correct me, and Samuel will explain better. But when we're part of the Community Power Coalition of New Hampshire, when the actual pro forma was given a road test by Ascend Analytics, they plotted out the income of the coalition from selling electricity versus the changes in the wholesale rate, which change a lot seasonally. And there's a period where you're putting away reserves because the rate is higher than the wholesale costs. And there's times that you have to take those reserves and put them to work because the wholesale rate's higher than the rate we're charging, particularly January, February. So that has a huge impact on if we launch in the fall. We would essentially not be able to assist the coalition in building reserves, and in fact, we'd be costing as much as $2 million in January and February. And just for reference, the whole enterprise looked at startup losses of around $2 million. So and that amplifies the risk. It raises a difficult question for the CPCNH Risk Management Committee. Were they to look at a fall application from us? And, it seems to shake out that it's not in the best interest of all or anyone to do that. So, that gives us, we spent a lot of time, as I think you're aware through what we shared with you, back and forth with Samuel Golding, and it is possible, if we step lively, to get underway in June. And it's also totally safe to wait until next spring. But, we'll discuss the merits of that. I asked if Samuel could be with us tonight just to maybe answer questions about this change. We started really digging into this Friday, and so it's been a lot of rapid movement around this over the last 5 days. Is Samuel?
He's still with us.
Still there, I think.
He's just not there. He is showing him.
There he is.
For
Hi,
some
Samuel.
reason you
Oh, maybe
weren't
his camera was off.
show him up here. Yeah.
Did I get that explanation pretty much right? Halfway right?
Yeah, that was a good recap.
So he's here to maybe explain how he had to break this to us gently, and and where we, what some of the causation is. So whatever you'd like to add to that.
And just as a backdrop for Samuel, for those who don't recall or weren't involved at the time, but he's our lead technical consultant, and he's been doing absolutely incredible work for the coalition for a few years now, and is in a sprint right now to implement on April 1 for the Wave 1 communities. But he has been up to his eyeballs working with the various consultants, Calpine, Ascend, and Samuel himself being quite technical. But he's been working hand in glove with Ascend on all of the technical assessment of the business plan and the readiness for go live. So there's probably nothing he can't answer that even Ascend could answer. Samuel's he knows this stuff.
Thanks for the kind words, Kevin. So, John, I think you passed around the chart that I pulled together very quickly showing the retail wholesale spread.
I did, yeah. Folks were able to read that before the meeting.
Okay, great. And that just, full disclosure, that is taking the prices that Eversource entered into for default supply periods every 6 months. And if you go into the regulatory filings, you can see the price that they were quoted for power consumed in each month. And then they take that and they estimate what the load volumes are for the small default customer class, residential, small commercial, and they come up with an average rate. And so you get periods where the rate is above or below the cost that's being paid out to the suppliers. And so this is a proxy for the same sort of cost drivers and exposures that CPC&H will have going to market. So it'll have more flexibility there, but really there's not, if you want to hedge the winter months ahead of time, there will be quite the risk premium tacked onto that. And so, John, did you circulate the second graph I mocked up?
That was the curves.
Yeah.
Yeah, everybody's got that too.
Okay, so that I just kind of ran through. I estimated what Portsmouth's load volumes would be for most of your customers who can service, and just mocked up what the cash flow would look like. And so if you do a fall launch and assuming typical kind of retail wholesale spread patterns hold, as Eversource has experienced, and which we anticipate as well, it does require a lot of credit support to get, if you launch in the fall, you don't have much reserves to speak of built up by the time those winter months come, and you would have to draw upon credit to maintain liquidity through those months, and you wind up kind of worse than where you would have been if you just waited until the spring to launch. Another way to think about it is that a spring launch maximizes the net revenues that you accrue in the first year of operations, because you're entering the market at a time when you've managed to avoid having to pay for power in the winter, but you are enrolling customers who are being charged a rate by Eversource that is much higher at that point in the spring than the power costs that you would be responsible for. And so that creates a spread between the retail price that customers pay and your underlying wholesale costs that flow a lot of money into reserves. Question?
So, go ahead.
I defer.
So Samuel, did you look at what the impact to CPC&H's cash flow would be if an intermediate start time, not the fall, but later? And is that a net neutral, or is that because enough revenue would generated by the city would be offset by the losses, or is there a positive? And would CPC&H benefit from the city holding off till next spring?
Yes.
A full year, and that way having coffers filled up that much more to be able to bring on somebody in a better financial position?
Oh, well, so the previous modeling runs looked at what would happen to the coalition if Nashua delayed until June to launch, and that would be 40% of the load. And it was still perfectly viable, had enough credit support, and would accrue enough net revenues, reserves collectively to make it through the winter and be fine. Now Nashua is back on track to launch in May, potentially sometime in April as well, which will enhance, obviously bring in more net revenues for the whole enterprise. And I don't foresee any challenges accommodating a June launch for Portsmouth on that basis. And of course, if you do decide that you want to go forward with that, we will run some scenarios on it and just kick the tires to make sure. But my sense is that it would be, the coalition would be able to accommodate it.
So just
And it would benefit you and it would benefit the coalition.
So just a quick follow-up. Is there a negative to the coalition if we waited a year?
I suppose it wouldn't be as beneficial compared to launching in June, because there's more load volume. It is still net positive at that point. And then, more load volume means other members, the fixed costs of the operations are that much more spread out across more load. So other members see a bit of a financial benefit from that.
Got it.
Thank you.
Hi, Samuel. I had a question about the analysis you provided. I just wanted to start by saying thanks for providing this. It's a really helpful illustration. But I wanted to ask about where the variable cost values come from. And then I want to follow on with what does that suggest about the way we're going to actively manage the portfolio.
Yes. Those come from, as I mentioned at the outset, just the regulatory filings that disclose Eversource's pricing that they received and the supply agreement rate prices that on which they are setting the rates. So it is a proxy. It's kind of an indicative
Right.
illustration of that sort of seasonal dynamic.
Right. And if I could explore that just a little bit further, these look like monthly strips exposing us to the wholesale rate entirely. I mean, this to me looks like the comparison between a fixed rate that changes twice a year and those monthly spot market estimates of what the wholesale price would be. Am I understanding that correctly?
Nearly. It's the fixed 6-month rate compared to the variable monthly forward hedged cost of all requirements electricity in this case.
Okay.
So it's not the spot market per se.
So it's a 6-month forward.
Yes.
Okay. Just because when I looked at this initially, I had the perception that if this is just let's say a proxy for the monthly wholesale rate, this analysis, the counterfactual that you put forward, seems to presume that we'd be fully exposed to the wholesale rate. And so we're comparing, exposure to the wholesale rate on a monthly basis versus something that's, fixed every 6 months. And that led me to question, okay, this is interesting and helpful for this illustration, and I'm persuaded by your conclusions and understand them and agree with them, but it raises a question for me of, how would this variable cost counterfactual here, how does that relate to the active portfolio management strategy? Because I figured you would load up some short, some long, maybe different risk profiles, ladders, all that good stuff, and that would have likely a somewhat different price profile than what we're seeing here. And is it?
It absolutely would.
And it's hard. It's difficult to estimate by how much different, though, right?
Precisely.
So, from your understanding of the strategies that we would pursue under active portfolio management versus the proxy that we've got here for this illustration, is it relatively close and still directionally consistent, though?
It's directionally consistent for sure. There's, the forward curves do change. There'll be very active management, kind of daily alerts, weekly reports on all the positions and how the market's moving and the exposures of the portfolio. At least monthly meetings of the risk management committee, or more frequently as conditions require, to deliberate on whether or not to authorize, liquidating a position or taking on another position. Yes, it is difficult to predict in advance how that will all shake out and what the equivalent of this graph will look like for the coalition in 2 years' time, looking back.
Right. And so, as an example of what happens in terms of timing, makes complete sense. Is it also fair to assume that maybe as the portfolio is launching, there would be a larger exposure to kind of wholesale spot rates or, a version of them? Whereas over time, once you've built the portfolio, it would have, different kinds of characteristics in terms of seasonal volatility?
Yes, although I think the goal is to minimize spot exposure
Right.
prior to the accrual of reserves. So they'll be probably hedging around 105% of load requirements for the initial year or so. There's also a strategy to kind of smooth the cash flow requirements and better align them with the retail revenue inflows by negotiating payment terms with suppliers that kind of amortize the cost
Sure.
over the term, and maybe having a 1-year term for certain components of the portfolio. But again, all of that is kind of being structured and put in place and will evolve.
Great. And last question?
Go ahead, man.
Last question. So this analysis you've shared with us, it illustrates how important the timing of the launch is, and that's in the abstract helpful, but I understand that when you launch as CPC&H is standing up and developing its portfolio, it's maybe even more important to time it in a wise way so that we're not dipping into debt service and things of that nature early on in the portfolio development process.
Yes, preferably.
Yeah. Thank you. Appreciate it.
Good questions, but my take from what I'm hearing, Samuel, there's windage in this graph that you put together for us. You quickly to reflect Portsmouth, but to Ben's final point there, the kind of the conclusion is spring launches are the best where you need to be, and at least for the foreseeable future, the coalition would not advocate any community launch in the fall. And I don't know if I'm getting ahead of myself here, but in the future, perhaps, as we have onesie and twosie communities come on board during the course of the year, and our reserve levels are where they need to be, perhaps the coalition could support a community coming on board in the fall, but at least for the first year or two, financially, it doesn't make sense for the community or the coalition to do so. Is that kind of an accurate summary?
Yes, and it's, I view it on two levels. It's, can the coalition support it from a, credit and liquidity perspective? And that depends on the size of the community and the numbers of communities that want to launch. And then from the individual community's perspective, it probably makes financial sense to wait until the spring. And that'll be the case for, as long as these dynamics continue to define the economics of it.
So Samuel, I'm not quite clear why an individual community would be impacted versus CPCNH. I mean, CPCNH is the one that's managing the portfolio, they're holding all the revenues, the individual communities aren't exposed to anything. It's just the ratepayers, so I'm not quite clear when you say, why there'd be a benefit to why there'd be an impact. I mean, it's really CPCNH that's going to receive the impact, and they have to decide whether they want to take that additional cost on, or if it's mid-year or out of that spring cycle.
Sure. Well, so the way it flows back to the community is that revenues in excess of costs go into joint reserves. However, reserve contributions or outflows of reserves to cover shortfalls on behalf of particular members are tracked. So, say a member launches in April and then decides under the cost sharing agreement and the member services contract, anytime in the first year they can choose to say, hey, this wasn't for us. We'd like to exit the coalition. And their ability to do that, the timing of their exit is 3 years from the day that that CPCNH launched service. And it could actually be it could be a year sooner, 2 years sooner even, if CPCNH hasn't entered into hedges on behalf of that CPA or the pool going out the full 3 years. And when that termination date rolls around and the individual CPA exits the coalition, they have rights to, they would just be given their allocated reserves back. So the net reserves are held on behalf of the members by CPCNH. And that's the only way it would kind of flow back and impact an individual member. For all other intents and purposes, it is a pooled portfolio. It's managed from that perspective financially. That's why the reserves are pooled. And rates are set that way as well.
Samuel, if we, let's say that we got our aggregation plan done, as we've talked about, looking at the possibility of June, would we have a lot more clarity around rates in May, April, May?
Yes, you will know what the rates are by mid-February, early mid-February, if the timeline holds.
Okay.
Because the rates are the same for all CPAs served by CPCNH within a given utility's default period.
Right. And I was hearing you say that if we did June, it models out as manageable by CPCNH. It also would build some reserves over the summer months, and it would be something that we could go in knowing the rates, and it would also, by being part of the coalition in 2023 versus 24, we help the economies of scale with the overhead.
And then also, Samuel, can you just talk to, if we went live in June, the rates reset August 1st, right?
Yes.
And we will know at the latest by July 1st what the rate is going to be for August. So could you just speak for our commission here, committee, the probability that the coalition will still have a rate, a basic service rate that is lower than Eversource? Because if we went live in June, we're only up and running June and July, and then the rates reset. And it wouldn't be a good thing if all of a sudden the lower rate that Eversource within 2 months flipped. So you just talk about the probability of that. I know you can't promise anything, but the probability.
Well, I would think that there would be a very high probability of rates continuing to be competitive throughout the second period and thereafter, actually, over the course of the modeling, assuming that reserves are collected assuming that rates are set in a manner that continues to prioritize the accrual of financial reserves for the first few years, in accordance with the financial reserves policy that the board adopted with the target levels, there are no real scenarios in which CPC&H would have to set rates at a level that wouldn't be competitive with the utilities. It's possible, and if you're kind of focused on just the second period, I can't foresee of a situation in which CPC&H wouldn't beat the utilities rates. The amount of funds that are accrued in reserves is very high because of the current spread between wholesale costs and utility rates is the highest that it's been over the last 3 or 4 years that were analyzed by quite a lot. So,
Yeah, good. Because, I mean, that just would be a public relations nightmare to be live for 2 months and then it
yes,
flips back, you know?
it would be.
Yeah. Okay.
That's not one of the many things that I worry about.
Okay.
Okay. Other questions for Samuel? I'll just ask one more. You know, a big part of this is not just the competitive price that we would get and the renewable options at more competitive prices, but getting the public to understand it, appreciate it, feel comfortable about it. How much public relations and community engagement is going to be happening over the next 3 or 4 months versus, you know, late in the year or early next year?
Well, there's certainly a wave of public engagement planned right now. Coalition is, you know, a fair bit of news coverage at present. The coalition is about to engage a public relations firm to support media efforts. There are a dozen public engagement campaigns gearing up across all of the Wave 1 member communities. And those are, CPC&H is supporting the local energy committees to conduct those campaigns for the most part by providing materials, trainings on kind of being interviewed by the media, talking points and FAQs to explain things, also reflected on the websites that are being designed and put online over the next few weeks for each individual member.
Well,
so it's difficult. I'm so focused on the next few weeks and months that
I know, I'm kind of taking you out of your speed lane on.
Right.
But,
I mean, 6 months from now, what would the coverage be like relative to when we launch? I think it'll be robust coverage either way.
Yeah. Yeah.
Yeah, I mean, there's a package of communications that are tied to communities launching. That's one thing. And then the steady state type communications is, I don't think that's been really articulated yet.
Yeah, and the other thing I don't think we can underestimate is as Wave 1 communities roll this out and thousands of customers get letters, and if that's a good experience, and there's excitement around that, that gets a lot of conversation happening statewide. There's buzz around launch.
What's that?
There's buzz around launching.
Absolutely, yes.
Yeah. Do we have other questions? I want to thank you, Samuel, for sharing your expertise. I think we've got to deliberate now on which way to go here, on the pros and cons. But what I hear is you think the coalition could support either option.
Yes, I do. And let me know if I can produce anything else to support your decision. Are you making a choice tonight?
Well, we'll see if we can get there.
Okay, well, keep me posted, and we'll factor it into the modeling and the planning, and whichever way you go.
Right. Let's put it this way. I don't think if we want to do June, we do need to decide quickly.
Yes, you will.
Thanks a lot.
Thanks, Samuel.
Thank you.
Yep. So we took a look more in depth at a go live in June scenario and what it would mean. So let's assume that we can comfortably plan around the spring. That's not, that's not hard to do. But Kevin, who did our last timeline and has been through rollouts with Eversource for aggregations all over the place, put this together for us. My take is it's feasible. It's aggressive, but it's feasible. And really, the key part is is February, because, put it this way, if we get our aggregation plan done through the 2 public hearings, and then we get it to the City Council and to the PUC, we have the option of June. We don't have to do June, but we have the option. On the other hand, if we follow the old timeline that we had and slide the EAP completion into March, then we don't have the option of June. Allison.
Well, my big concern really is community engagement. And the fact is that I really don't know how many people understand this, and if they're going to feel, the survey mentions a 2/9 public hearing. How many surveys are we going to get back in that amount of time? I mean, that's a very short period of time, to me, for surveys to come back. And then we've got a public hearing on the same day, 1 week apart. And is that really going to reach different people? Are they going to be available on that, at that time, just 1 week apart? And it just seems, that's the way I feel about it. I mean, I just don't know if we're going to get enough people on board.
Can I just frame a little bit before we kind of get into this, just because this isn't a huge deviation from where we were, to tell you the truth. The eventual launch is, but in the plan that you submitted to the council back in the fall, we said we were going to get our EAP approved in March, and we were going to submit it in April to the commission, right? So now and then we revamped that schedule over the holidays, and we the previous schedule said was we were going to finalize the EAP and submit it to the PUC by the end of the first quarter. The most recent schedule said we were going to submit it to the PUC in April, right? Because one of the reasons all along was, while we were focusing on the fall, was that we might have the potential to do a rolling implementation at the coalition. And we wanted to have our act together should that opportunity in the markets give us that opportunity, right? Or there would have been no reason why we were going so fast to submit this quarter if we were going to be launching not till the fall, right? And as Samuel said, the Ascend is saying this is, and they conclude it in their technical analysis, is from their perspective a very strong time for a CPA to launch. The one of the things we were trying to benefit from was having a Wave 1 launch before we went live. So halt the enrollment process, the initial kind of interface with the utilities, the billing, the metering, the call center setup, all of that was working. And if we were to pull back to June, we still have that. That still happens. Wave 1 launches, they're going to start, enrollments are going to start next month for the Wave 1, or in March. And we still kind of can benefit from making sure this thing is working before we were to go live, all right? From an education standpoint, from what I've seen in these other communities, and as far as we weren't going to implement till the fall, we had done a whole lot more than some of these other communities. We had the postcard that went out in the water bills. You had the 3S event. You've had op-eds. There's been newspaper articles. You have a survey that's about to go out in a week. These are all things that are beyond what other communities have done. And once, if we set still, and I'm kind of Switzerland on this, but I'm just, before we get too much heartburn over that this is a huge change, it isn't really. The heavyweight communication is from the point in time where you start working toward the implementation date, and you have the hearings. There's the process that CP&H supports with all sorts of communications, and I think most of us kind of appreciate the idea of just-in-time training or just-in-time education. If we were to do all of this now with our hearings, because we were going to be doing the hearings anyway, and then not launch till next spring, you kind of lose the value of that, all of that communication. It's almost like you'd have to do it again. And you're not implementing until June, and it's only January. And so there's certainly a big window here to do a whole lot of communication that would be planned. So I think that the two risks, one, we wanted to monitor Wave 1. You still have the opportunity to do that. And there's still, we've done a lot of communication, and there's a lot that'll happen between now and go live. And I think the thing we can't lose sight of is we have the opportunity to deliver a lower rate to our customers 10 months earlier. So if we don't do this, we're sitting on a lower rate for our residents for the next 10 months, which to me gives me some pause.
I totally agree with you, and I understand that this really isn't that much different
It isn't.
time-wise.
It is not.
But the thing that still gets to me is just the fact that I don't know that we've reached enough people.
Yep.
That's really it.
Yeah.
And I feel like, having 2 public hearings, 1 week apart, same day, or same evening,
Yeah.
whatever. I don't know, some people get the perception that the city tries to pull things on them if they don't really understand it.
Yep.
And so that's the only thing I don't want to run into, is that we get this negative press that says, we didn't know about it. Why are you doing this?
And if you ask people today on January, whatever, today is 18th, I can understand that. But if you ask people a month from now, 2 months from now, I think the education, and if you talk to some of these other communities for their hearings, people didn't even show up. Wave 1 communities are going live, and they said folks didn't, their rooms where they could count on a couple of hands how many people showed up at the public hearing. So we had 100 people at the 3S event back in June. And to try to keep this alive and not have the issue get stale, we do all this, do our hearings, finalize our plan, get all dressed up for the dance, and say, okay, we're going to wait a year. is I think, in my mind, it's a little bit of a difficult sell to the public. When they start seeing in the news that Durham, Dover, Exeter, Rye are all going live April 1 and the rates are lower, it's a tough explanation, why are we waiting 10 months? And I'm a risk-adverse guy. I spent half my career in auditing. I'm not a risk taker. But I think there's, from my perspective, there's an option here that isn't running with scissors, really. I think it's
Oh,
doable.
I mean, I want to do it now.
Yeah.
You know, but I'm just playing devil's advocate
Absolutely.
in that,
Yeah.
you know, I've lived here for a long time, and I've seen how some things have gone.
Yeah, yeah.
That's,
I just wanted to remind folks, we're not on that different of a schedule in terms of our preparation.
Yeah.
It's the launch is the big change.
I understand what you're saying, Allison. It's what do they want to pull here? But let's remember how big is the risk really if somebody who wasn't engaged gets a letter saying, Portsmouth Community Power is going to offer you this rate, it's lower than the default rate, or you can opt out. That's really the proposition.
okay?
And, everybody gets that letter, which is the ultimate communications part of it.
So just to play devil's advocate.
Yes.
Kevin, you say there's a risk of delaying it, it gets stale. Why not just hold off on the whole push, and time it so that it could meet that 1 year? And then you can address, Allison's concern relative to rolling this out in a manner that could be perceived as city forcing something down people's throats. Whether it is or not, it's still a perception thing, and it still could have material impacts to the success of a program like this.
Yeah, and we could do it over a year, but number one, by that time, more neighbor communities are getting the benefits.
It's 5%
Yeah.
on 20 cents. That's 19 cents. It's 1 cent on and the risk in my mind is, you create an episode
Right.
instead of a program. And, Allison has seen it happen. I've seen it happen. We want success here. We want a program that's implementable. It does seem like an aggressive hearing schedule. It's coming up in the next few weeks. I would advise you caution and pace yourself.
Well, what's the worst that happens, right? We get a lot of pushback, and we say, okay, this needs more time, we'll go next spring. So you end up in the same place.
Originally, the hearings were going to be November and December, and then we switched them to January and February. That was
And
this.
then we moved it to February and March. So now it's February and February.
Yeah, and the reason to do that is the fact that, if we get into this thing here, is the EAP, when it gets filed with the PUC, starts a 60-day clock. And then when they approve it, it starts a 45-day clock. So that's where we kind of backed up to those kind of administrative things that need to take place, needed to get jammed up a bit to allow that clock to play out. That allows the implementation in June, and CPC&H wasn't advising to go out any further than June from a financial perspective. So that's where you kind of backed into how to do those. Clifton mentioned in Lebanon, they did a public hearing and then turned around 2 weeks later and had the second public hearing as part of one of their city council meetings because they wanted to get the EAP in. So, but.
That's actually something to think about, is maybe putting the second public hearing on a night of a council meeting so people are paying attention to the council. Will pick it up as well, rather than holding them both on a Thursday night. But having said that, I doubt we'll get a lot of engagement no matter when we hold our public hearings.
Yep.
Because it's not really a controversial issue that people are going to turn out for. Whereas we're going to get a lot of engagement no matter when we launch. leading right up to it, once it becomes apparent we're launching. So I don't think the timing of the launch predicts how much engagement and how many complaints we get either. I think the same people who are going to be frustrated are going to be frustrated before June as will be frustrated next spring before April. So we don't solve that problem by pushing the timeline out. I think that my real question, and I think one thing that would drive the timeline for us, is if they set rates and we find rates in February and the rates are only, a little bit off where Eversource is.
They're
I
going to
think-
be about 5%. They're already 5 to 7.5%.
That's 1 cent.
Right. Whereas I'm paying 13 cents right now for my rate because I'm using a alternative supplier. So
Well, if we're going to argue
so
about
that's-
the
so-
amount of delta, then we may never implement a CPA because it's never going to be 5 cents.
So the-
No, what I'm saying is from a public relations perspective, if it's not a huge savings, people won't see it as a huge savings. So that's where we come down with the public relations side of things.
Right, and we've talked about not stressing doing this because of cost savings. We've talked about this for the doing it for the right reasons, and so I would, again, caution to not focus on you're getting less, it's comparable to your default, but you're getting green.
But financially, though, just to add on to that, the ability for the city to build up reserves for the next 10 months in a period where Ascend is saying they've never seen a market that this advantageous for a CPA to launch, and they've done all the ones in California. So we have 10 months where Portsmouth has the ability perhaps to build up more reserves than might be in year 2 and year 3 in terms of what's the headroom in the rate. So that's why Ascend was all, very, very, very positive about the Wave 1 communities going live, is the ability, because part of the coalition is to get stable financially and then to be able to start to do other things around projects, et cetera. But the first thing they need to do is build up joint reserves to a certain level, and they have to hit targets, and then there's going to be reserves that are going to be available for projects in the community. So the thing that you kind of forego, Peter, if you don't go live this year, is whatever reserves the city was able to put into its coffers between June and next April.
Right.
That's
And
part of the
so-
financial.
So just to explain that, I mean, it's not I know it's allocated to the city, but it's not the city's coffers. It's CPCNH's reserved
The
amounts.
CPA's coffers, the Portsmouth CPA.
Right.
It's not the
but-
city of Portsmouth.
Right. It just, the people who are listening or queuing in later, I think it's important to differentiate, because we talk a lot about city, and it's not the city, it's CPCNH, and it's an allocation of resources within that could be allocated back to projects in Portsmouth,
Yeah.
right? Is that?
Initially, it's into joint reserves. The city has,
Right, for
the
stabilization.
CPA has an obligation to support joint reserves to cover so many days of operating costs for the CPA. So it's the Portsmouth CPA, I stand corrected, would benefit from its financial stability strengthens over the reserves that would be put into it over the next 10 months, and would be available should, in subsequent periods, those reserves needs to be tapped into to keep the rate lower than the utility default service. So,
Yeah.
Kevin, what effect would it have if the majority of people receive the postcard and decide they're going to opt out? That they don't want to participate?
yeah, if there was a lot, I mean, that changes the load profile for the city. But these aggregations all around the country, and Ascend has the numbers in there in year 1, year 2. I think it's somewhere between 3 and 5% opt out of the program. And then some continue to opt out over the first few months. They may launch with it. They may go a couple months before they even realize that they're part of the coalition and then say, I'm not. But it's in the single digit is the history in the states that have CPA programs.
Ben?
I was just going to say, one of the other advantages of launching, right now, the rates are pretty high. And people, your bill is going to be really low in May, June. My lowest bill is always June. So people aren't really going to notice much of a difference, I don't think, immediately. if we launch. So unless there's a major problem with customer service, it's not going to be obvious to people
Right.
that there's really a difference.
And we will have seen Wave 1 launch April 1st to know if the customer service is solid, if the rollout is solid. I mean, we are a fast follower in this schedule. Ben, you were going to...
Yeah, thanks. Kevin, have you heard much from the CNH folks around the regulatory calendar? If we submit something to the PUC in the past, recent history, there's been a bit of a delay, we'll call it, getting things back out of the PUC.
For filing our EAP.
Yeah.
They can take up to 60 days.
Yep.
And they have been taking up to 60 days. They had a lot of EAPs that were submitted around the same time, the Wave 1 communities, because they all had to do some modifications, and they kind of submitted them in mass over a few weeks. So they took somewhere between 58, 59, 60 days. There's a potential they do it quicker, but they have to do it per regulation within 60 days.
So there is a 60-day limit in statute or in regulation somewhere?
Yes, yeah. They have up to 60 days, and they have been taking it. So that's where the clock, and then once they approve it, then in the note here that we passed around, the risk committee would approve starting a procurement for Portsmouth. And you have the ability right up to that point in time to back out.
Right.
Portsmouth could back out of the CPA at that point, even waiting the 60
point?
days. Pardon?
At what point?
Once we file the EAP, the PUC has 60 days.
Right.
Like the day later, the risk committee of the coalition meets to authorize procurement of power for that new CPA, in this case Portsmouth. At that meeting, Portsmouth has the ability to say, tap out, we're not in, for whatever reason, we're going to back out, and then they wouldn't go forward with procurement. So that would be out, the dates are on there, whenever that is, April 12th. So under this scenario, this schedule here, Portsmouth would have up to April 12th to have seen how the planning went for Wave 1. Did everything implement okay, and could tap out on the 13th.
I just have to be a time cop
You guys have
again.
your,
Yeah, well,
Yep.
I mean, my feeling is that I don't think it's going to hurt anything to go forward as long as we can opt out by that date, because if we get very negative feedback on the survey or the public hearings, then I think that would maybe change our mind, but
Yep.
Is there any way to move that February 9th hearing to the 6th, the city council night, do we think?
that's in the postcard, I think it mentions the
It's in the
9th.
postcard, I know.
Card says, please submit the survey by February 8th. I could change the reply that says, come to the hearing anytime.
Or we could move the 2nd to the 6th and have the 6th and the 9th twice in 1 week. That's the only concern I have, is twice in 1 week, so if somebody's out of town, that is more difficult.
And you wouldn't
Might-
have your survey data.
That's right.
It
Well, you wouldn't have
might
it for the 2nd anyway.
be helpful to have it on a different day, like a Saturday, when more people can come.
Yeah,
The
we can play with
the
that.
11th.
Yeah. But I would point out that we have a council work session
Right. Or
on
just combine it.
February 13th, which would be a whole hour devoted to community power.
The hard stop on this is to submit the EAP by February 10th.
Have a good evening, everybody.
Okay.
Thank you.
Thank you for your notes of caution.
Get in there, too.
Yeah.
Yeah, so do we.
Yeah, you got it.
So we got to submit the EAP before the council approves it?
We're able to do that.
We're able to do that, have them run parallel. As
'cause
opposed to sequential.
Then that, if you back up the calendar, we want to be able to be launching for the month of June, within the calendar month of June. And if you back up the calendar, so we were discussing with the coalition not submitting it till February 20, after the February 21st approval. And that pushes it out too far. And there's the ability that the regulation allows the EAP to be submitted after the hearings, but before council approves, and have it go in
Truly
parallel.
Switzerland?
Pardon?
You're truly Switzerland?
I am. I don't see, if we had to stay up 24 hours a day to make this happen and to, do just incredible things, but it is jamming up the schedule a little bit, but it's kind of what we were going to do anyway. And I'm concerned about foregoing a year of ability to build up reserves and to have a rate, even if it's only 5%, but lower than the utility default service, because
Okay.
that's our option.
So let me just get a sense of where everybody's at. Allison?
Yeah, I'm ready to go.
Ben?
I'm not yet persuaded we should go wave 1 or June.
Kate?
I think I'm okay with it.
Kevin?
I'm okay.
I look at it as if we do a fall launch, I mean, we can't do a fall launch, but we're pretty close to the original schedule. It does acquire a little acceleration here and there. We get to see the first wave towns roll out April 1st. We learn from that. We see if there's problems. And, if we set our near-term goal as let's get the EAP done by the 10th for the PUC, then we have options. And if we settle back and don't push for that, we have no options but the fall. So,
One question. How many towns did you do?
I wasn't involved at this
Not
level.
in New Hampshire.
None.
In Massachusetts, you did,
My involvement was a whole different, I was on the utility side.
I know, but how many towns did you do?
A handful, a lot. But
How
I didn't
does this schedule compare to
set
those
schedules.
towns? How does this compare to those?
We supported whatever schedule the town was on, so I can't really opine on how fast towns moved.
Have you seen a town move this fast?
I don't, that's why I tried to set at the beginning here, I don't see us moving a whole lot faster than we were. We were going to have our hearings and file our EAP within a 2-month period. Now it's like within a 6-week period. And the thing that's changing is then we're going to move forward to implement faster. But our preparation window here isn't really changing all that much. And to the counselor's point, I mean, we have the ability, I guess, to get the EAP out of our hands into the PUC, and it still gives us time as a committee not to feel like we're rushing our decision here.
I'm comfortable with the AP. I'm really impressed at how far it's come along.
yeah, and then that's the near-term goal.
And you're always going to have, and this is one thing I do know from my involvement, is you're always going to have residents in a community that say they were not aware, or I don't like having been opted, I have
gonna
to
hear
opt
from Mr.
out,
Brighton no matter
et
what
cetera.
we do.
So if we had all the time in the world, it will never be pristine.
I get that. The 2 months lag from April to June, that's key shoulder month. Those are key reserve building times. You still think we're building sufficient reserves starting in June?
Well, we're not building as much by implementing in June.
Yeah, I feel like we're just squeaking by if we do.
But
June.
you're building reserves, the model says, from June all the way out through October.
Through October.
And that's a lot of months. And if we wait, we wouldn't have built those reserves, whatever they are. They're not as great as if we implemented April 1st, but I would have never advised we implement April 1st and be part of the first wave, because there's a lot of moving parts here on the procurement and the retail side, particularly the retail side, that are going to get road tested by the Wave 1 communities. And I would not be comfortable to be in that group.
I appreciate your solicitude. I all along have been concerned about the community engagement, public education piece. I have a vague feeling, totally subjective, that we're compressing that.
I can
So
tell
as
you,
long
Yeah.
as long as we still feel like we can do it justice, I can get there.
I've seen
That's what we gotta do then.
the communication material that the CPCNH is using, has put together for the Wave 1 communities. It's good. It's professional, a lot
Yeah,
of collateral material.
I've seen it.
And they're there's a lot more that will follow here from a communication standpoint.
And we need you to be that voice that says, do more engagement, do more engagement.
Okay.
And it is going to go quickly, but sometimes top-of-mind awareness happens more when there's a succession of quick events.
I understand that.
And just the survey going out. This is going to be the second communication piece that's gone to all residents.
Yeah, it showed up today at my house,
It did.
the postcard.
Really?
Already?
Yeah. It looked great.
You're in the first wave.
It must be.
Did you take the survey?
Are we,
Not yet.
Counselor, Mr. Chairman, are we ending the meeting?
Yes, we're adjourned.
Thank you.
Okay.
Recording stopped.
So